Okay. Dun, dun, dun. I see you, Donna. Want me to make you co-host? Here, I'll make you co-host.
Please.
There you go. She's the boss, and from what I hear, she's
Thank
kind of
you.
vicious. So y'all might want to be careful.
Not that.
Okay, only a little bit. Well, welcome everyone, real quick, to the Super Easy Beginners class. For those of you who don't know me, I coach exclusively inside of Super Easy. So we do kind of have a public side of it to where it's part of the whole group, and some of that we put live on YouTube. So most of that is just to kind of share with Pat or for Pat and kind of the group and the family. The rest of it is just to kind of share the information. So as you guys know, everything I talk about on this call is for educational purposes only, meaning I am not your tax advisor, your accountant, I am not your attorney, or anything of the sort. Please do not trade what you cannot afford to lose. Don't take a trade either if your account can't even hold the drawdown. So once you get past all that, you guys know the risk disclaimers and all that other good stuff. Real quick, before I go any further than that, I am going to say this, I'm going to say it again. There is a plethora of people inside the group, outside of the group, on Telegram, on YouTube, on every social media platform and messaging service out there known to man. Um, and all of them, are sending questions, tons and tons of questions, asking for help for big things, little things, 20 paragraphs worth of questions and all the other good stuff. And then, of course, you get the 20 questions worth of some really simple stuff. So I'm going to say again, please, guys, if you can avoid it, don't pay for private coaching. For the most part, if there is anything under the sun and I am able to help you, I will help you. The best way to do that is, yes, to speak up, and you hear me on here almost to the point of sounding, please, please, please come on out and talk. By all means, bring those kinds of questions to class. I know it's a little nerve wracking to hear your own voice on recording or to ask what you might feel like is a stupid question, in front of hundreds or even thousands of viewers. However, I promise your question will not only help you, but it'll help somebody else. So I say that to say I've been through the trading journey for, many years now, not a whole bunch. I'm still a baby compared to many. But I can honestly say that for the first almost 4 years of my trading journey, I literally had no one to ask or kind of even run an idea past, share a loss with, ask about a certain candle or just kind of exchange ideas or share charts and say, hey, this is what I'm seeing. Do you agree or what's your take on it? And in all that time, all the memberships, all the hundreds and thousands of dollars in coaching, the top packages and some really well-known companies, I still didn't have a single person I could just ask a question to. So that's kind of the idea of these calls. I'm sorry, but there is no way under the sun, it doesn't matter how many assistants I hire, that I can get through that many messages. So if you have questions, please do ask them on YouTube. Miss Donna is monitoring that right now, so she can kind of chime in on your behalf if you're not live on the Zoom. If you are live on the Zoom, again, I can't stress enough. I can't get to all the messages, but I can sure help you now. So totally up to you if you're able and willing to do so. So again, welcome everyone. This is the Super Easy Call. I'm going to stop this share and then I'm going to go to the new share from the right thing. Anybody have anything amazing going on? Anybody at all? Ooh, that's not a good chart. I guess it'll have to work. Hold on, let me change my template real quick before I do that. I know better, in theory. Maybe, baby. I should have simplicity on here. Doesn't look I do, go figure. So I got to pull up a new template and I got to pull up simplicity. So bear with me so I can make sure I have it. All the licensing coded, signed into this broker, because you guys know what will happen if I don't. It's not going to come through. So now that I got that, there we go. Now I will hit share full screen. Ta-da. And there we go. So you guys can all see that okay? All of you guys can? Optimize for, there you go.
Yes.
Yes.
All right, awesome. Thank you. So for those of you guys, first and foremost, who are within inside the group, a couple of you guys have some questions. So by Lucas, no mic. Oh, that stinks. It'd be nice. I miss you guys. Hey, I miss you too. It's if you're the same Lucas, I totally do. Sorry, no mic, no fun. But for those of you who were in the group who had questions, by all means, you guys come out first. Other than that, we'll kind of click through the pairs. We'll go over some things. We'll kind of go one by one over charting or just kind of click through the pairs and see what we're seeing. This is working pretty well, I will say, on the 30-minute time frame with some pretty good management. It took some time to kind of tweak the best management, I think, in general. but I'm really loving the 30-minute time frame. Had some hit and miss kind of days, but definitely am in profit, and I'm growing those small accounts using my compounding plans and using the trade managers and all other good stuff. So first things first, if you had questions in the chat, by all means, now it's time. So I'm going to say once, and then I'm going to say twice. That's it. So going once.
I have a question.
Yep, come on out.
Okay. My question is, Jenny, and it's really nothing about charts yet, but like I listen to you in your class, and you got a lot of knowledge about scalping, and I really think that that's what I want to do. And then, I try to be, I guess I try to be, participant. I'm in Uncle P's class in the morning times, and I go back and I listen to yours. I was in your class this morning, then I go back and I listen to his videos. I listened to his like about an hour ago, and what he was saying. Do you think I'm taking in too much info at one time, or am I trying to learn too much at one time? Because he's not teaching scalping, but you are, and he's teaching basically how to use the simplicity, and I'm getting a lot of good information from it, but I'm getting a lot of information from you too, and I just didn't want to overdo it. But I really want to scalp. I want to learn how to be a good scalper.
Okay, well, scalping has its advantages. I really feel like now is kind of the market for it, in my opinion. It doesn't mean it's the end all be all, but for me and mine right now, I kind of feel like it's the market for it. Having said that, do I think you're doing too much at once? I'm going to have to lovingly say no, because even when I first got started, everyone knows I was part of IML. I was like sacrificing sleep trying to be on, 5,000 different calls with 6,000 different trainers, learning 7,000 different things. So even if you are kind of splitting your time a little bit between his view and my view, and Irving or whomever, or sorry, Elvis, whoever, or maybe there's somebody outside of SuperEZ that you're kind of gaining knowledge from, I don't think that's too much, because ultimately your goal is to take this accumulative amount of knowledge and then find a way that you see it best. So it might be not 100% Jenny's way. It might be 30% Jenny's and 40% Pat's, and it might be 10% this and 20% that. And then you get this big picture that your eyes see. Because I can't say when or where, but at some point in theory, as with anything, you're going to come to this chart and you're going to say, I see it. You're either going to see the indicators, or you're going to see the candle formations, or you're going to see the structure, or that whole, flag kind of mentality. You're going to ultimately see something at some point. But so the more you learn, the better it'll be. Obviously, the less you learn, the slower you learn it, the longer it may take for you to see what you're going to see. So,
And I think the indicators and everything are really, really cool, but I really want to learn how to mark up a naked chart too.
okay.
Find my support and resistance areas, and just learn how to mark it up from scratch. I think that'll give me kind of a clear picture too.
Hi, Jenny.
Hey, Scott, how's it going?
All right. I want to just say a couple things about this. As far as listening to a lot of different people and learning, look especially for common elements. So, Pat will tell you types of markets to stay out of, and Jenny will tell you types of markets to stay out of. If you get common threads in that, mark that down as something of a little bit more importance. Always try to figure out the strategy that someone is showing you. What is it based on? Jenny's scalping strategies are generally trend based. Pat's, both the triple arrows and the new simplicity system are reversal based, turning into trends, but you're looking to catch them early in the trends. And so always keep that overview in mind as you're putting what people are saying through a filter, because there's always a point of view in what they're saying. So understand the filters, and don't get caught up in saying, but Jenny said, but Pat said. Okay.
Yes, sir.
That's
Good evening. My name is Dervin Brand. I'm new to this curriculum, this course. I've just recently purchased my SuperEZ 4X system, and I'm all set up. Just going through some of the videos. I'm just starting fresh, new. So just coming on here tonight to just see for somebody
Sound like you went away.
You disappeared. Are you there, mister?
Information.
Oops.
We caught the
You
last
went away for a
part.
bit.
Do you want to start over, Guy?
Yes. Well, like I was saying, sorry about that. Just had a call trying to come through. I'm new to the class. I just purchased my my SuperEZ system, and I got everything set up and everything. I'm just fairly new, and basically what I'm asking, what's the best course of action, for trying to learn it and trying to attain the information, so to make it as easy as possible for them.
How
'Cause I
new
have-
are you to trading?
Yes, I'm very new to it. I just purchased the system, and I've just been going back looking at some of the videos that Uncle P has up there, and I haven't finished all of them. But I just want to get on this class tonight just to hear some knowledge.
Are you just new to SuperEZ or are you new to trading?
Well, I just got the system. I'm trying to play with the demo accounts right now, so I can get comfortable
Wait.
with doing it.
Sir, I think we're trying to identify, are you new to trading or only new to SuperEZ, or both?
I'm new to it. And I'm actually working on a demo account. I haven't started a live account yet because I'm trying to get the knowledge of how to actually work the system and work it to the best of my ability. So
You new.
yes, I'm new.
Yeah, that's what we're trying to distinguish.
So have you heard of baby pips?
I was going to say baby pips. That's it all the way.
Not really.
Babypips.com is an educational website. It's free, and you can go through their course, and it will teach you a lot about the very basics of Forex and what the language is all about. And so when people are talking about an MA and all sorts of other stuff, Baby Pips will help be your guide to all of that. You can still learn something like Uncle P's system without that knowledge, but filling in that knowledge is really critical to your long-term success.
Okay. So you say babypips.com.
It'll help you with the terminology. Yeah, it'll help you with the terminology and being able to look at it. That's what I started with too when I first started a year ago. And it helped me follow along with the classes and understand what they were talking about. So that's a good place to start.
That has
Okay.
really helped me out a whole lot.
That's
I
awesome.
still refer back to it right now. I still study baby pips. And when I'm studying my charts and I'm trying to, figure out certain things with my charts without using indicators, it kind of puts things into perspective when I go back to when I refer back to baby pips. It really helps me put things into perspective.
Now, there are different ways of learning. People who like to learn by reading, Baby Pips is a great resource. There are a lot of pictures, as you would have to have. However, people that are more visual learners and auditory learners, sometimes getting an online class can be a really good thing. And there are some wonderful classes on Udemy. If I have Jenny's permission, I could mention one in particular that's kind of Baby Pips level stuff. And it's on sale for like $15 right now.
Yes.
Okay, there's a guy named Mohsen, Mohsen, Hassan, Hassan. He is the CEO of the Montreal Trading Group. It's a prop firm. And Udemy has sales all the time. I think it's like $15 or $15.99, something like that right now for lifetime access to this course. It's some number of hours of video. And he is extremely clear. It's Baby Pips level stuff. So if you are more of a visual and auditory learner, that's a great way to go.
Hey,
Yes, he's
Scott,
real
what is the
good.
website?
I'm sorry?
What is the website?
Udemy. That's letter U,
Can you type
DEMY.
it in the chat, Scott?
Yep. The YouTube chat. Or
Thank you. Or the in the Zoom,
yeah, I'll put it in the Zoom
and then I
chat.
can put or the okay.
Let me get the link for the actual class and I'll put that up.
All right, perfect. Okay, so that should kind of
Hey,
answer.
Jenny,
Hey, Waddy.
are you taking questions from YouTube yet?
I'm taking all the questions. Yes, ma'am.
Okay, I got a question from Simon. He says, what do you do to check when you enter a trade with simplicity? How do you pick best trades or good trades and avoid bad trades?
Best trades, good trades. You'll notice that I still have my fancy dancy 50 EMA. It's kind of my go-to on everything I do. Like Scott mentioned, I'm a trend-based trader that has it, mostly it has strengths, but it definitely has downfalls. The best way to avoid bad trades is when you're taking a signal and it hasn't yet broke a trend line. Okay, if it hasn't broken structure, if it's not making higher highs, your job is to skip that signal. So let's go find a losing signal. This one technically repainted it, but it was a winner. I don't know by how many pips. And this isn't a good 4x pair, so let's go pick a 4x pair. Any one of them, we'll do EN. EN is volatile. So like take something like this. We have a huge downtrend, but we don't make higher highs yet. Like we're still kind of in this zone. We don't even make a higher high until here. In which case, like you have to know we're waiting for it to break a trend line. We're waiting for a clear confirmation. So this is kind of his go-to oscillator that's with simplicity. I'm not a super big fan of it. To me, it just tells me what I already know. It tells me the same thing, but I understand kind of the need for it because it tells you higher and lower time frames. Worst case, if you're looking to avoid the losses, check other time frames, but just don't get so carried away where you're checking all the time frames because that's just a recipe for disaster. Because remember, if you get a simplicity signal or a triple arrow or any other counter trend trading system signal on every time frame, all that is telling you is that every time frame is pushing the opposite direction. So those are not necessarily, well, actually not at all the best trades to take. So avoid those trades, in my opinion. So check the next lower or the next higher time frame, depending on if you're scalping or swinging.
Hey, good evening, Jenny.
Hey, Joseph, how are you?
Doing well. I have a couple questions here. First question is, when you're doing a swing trade, when do you actually move in profit? Is it immediately or you wait for it to play out?
That's a really good question. So I hope that you have your listening ears on. We discussed that earlier today. So when you're scalping or you're in a very crazy market, kind of like the one we're in, your job is to protect your investment at any cost. And I'm not going to fib when I say we're kind of in a crazy market. Every single thing that China does, Trump does, the stock market does, we're getting really extreme swings both directions. So in today's market, your best option is probably protecting your trade when you're up like one ATR, one ADR, depending on the time frame you're trading. So I know that's like that's trading range essentially. But in layman's terms, on a slower moving pair, once you're up 20, 30 pips, on a faster pair, once you're up 30, 40, 50 pips, you're going to want to protect it. But in a calmer market, on my swing trades, I did not overprotect. I waited till like my first multiple entries closed prior to protecting anything. Like I protected, but usually it was only after that, 44, 55 kind of pip range, even on the slower pairs, because the way I was stacking them and the way that I was entering them in a less kind of swingy, extreme market, that was the best way to be. But for now, I would consider protecting slightly more, but not overprotecting if you're swinging. Because if you overprotect on this swing, this is Euro NZD, right? Let's talk about how many days this is. So that's, what is that? June 1st. The move continued to complete on the 10th. So that's a 10-day trade, and that's the 30-minute time frame. And that's kind of a long time, even if we rounded down and said only 8 days. But if you overprotect, you're going to get knocked out here. You're going to get knocked out here and again here and again here. Well, this would have got you out anyhow. So either way, on a multiple day trade, if you overprotect, you're going to miss the major part of the move. And the purpose of swing trading is to catch the major part of the move. So you can't choose to overprotect it. In my case, like if you were trying to scale out, you could change how you're doing it. But to swing simply means that the simplest way to swing effectively, at least in my opinion, is to have a higher risk to reward ratio. So that means you're only risking, 1 to 3, 1 to 4, 1 to 5. Right. So the percent that you're risking is 1 versus the amount you're going for is like 5 or 4 or 3, never less than a 1 to 2 risk to reward ratio.
Thank
Does
you,
that make
Jenny.
sense?
Yeah, I think that's one of my biggest thing right there is just trying to figure out, you know, am I overprotecting or sometimes I let him run too long and I fall into that trap often. So I'm trying to fix that right there.
Well, here's the best way to fix that. So if you took a trade, first off, you have to avoid the really nasty ones, the ugly ones. Let's see if we can find one. Maybe, baby. Anything with like a huge wick, huge candle, which would mean your stop loss has to be huge to be at the closest high or low. You have to avoid that. So like this right here, maybe. I don't see a really, really ugly one. This one's kind of big, but not super. Here you go. Here's a good example. Okay, so if I took an entry here, I'll draw a vertical line anywhere in here. My stop loss has to be way, 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 way up here. It's kind of big, right? So versus like a smaller one, your stop loss would only need to be here. So if I dropped another vertical line, if I took this entry, my stop loss only needs to be here. That's a much different stop loss. So then when you're looking left, you know that, hey, I can bring it to here. I can look at my zones. I can kind of see exactly where it's going or have a good idea where it's going. And I know that I don't have to take like a really, really bad risk to reward ratio. So if your risk is going to be too high, you have to go to a smaller time frame or that you have to skip that trade. So if there's like some massive candle, these aren't great examples, but they would work because of this kind of huge area up here, this big kind of top. That's a pretty big double top that you have. That makes for a very large stop loss. That means your take profit needs to be at least 150 pips, give or take, or essentially 2 to 1 minimum. So the bigger your stop loss, the bigger the amount of pips you're going for. And the reason you're getting knocked out before you're hitting take profit or like with a really bad, risk to reward ratio is probably because you're overprotecting. So that's where you need to like insert rules here. And that means maybe I'm not going to protect it. I'm not going to baby it. I'm going to say, okay, so if it doesn't cross back below the 50, or I'm going to say, okay, provided if you like TDI, say, okay, as long as my TDI doesn't cross back below the 50, or my MACD doesn't go back below the 0, or my RSI doesn't, hit the 45, for example, because it's allowed to retest the middle. It just shouldn't change directions. So you can insert any number of rules that will help you catch the majority of these swings. And then you don't have to protect as much, provided you have great rules on any one of these. Because this would get you out if you protected. This gets you out if you protect. Any pullback gets you out almost every time you protect. So it's a really not the best way to be in terms of swinging, especially in such a crazy market. These pullbacks are huge. So for you to catch this whole move or even half of it, you have to have a reasonable take profit, option A. Option B, you can't put your, stop loss into profit until you hit a certain number of pips. Like for example, 50, so once you've hit a 1-to-1 risk to reward ratio, whatever your stop loss was, once you hit that risk to reward ratio, then you can say, okay, now that makes me break even. So that's a 1-to-1, right? That I know for sure I can scale out of some of my position, meaning close partial of it, and I can move my stop loss to break even, but some amount of rules to keep you in the trade longer. And this is an NZD pair, so we already know kind of how NZD pairs move. They kind of have a lot of swings, a lot of movement. So that's probably the best way for you to catch a larger percentage of a bigger move is not to protect it, not to keep moving your take profit, but to accept the risk. So from the second you take the trade, you're basically making an agreement with yourself and MT4 and your broker saying, I accept the risk I'm taking. So if we took this trade right here, this is a perfect example, go figure. It's got a really tight stop loss. So if I knew my stop loss had to be at the most recent low, okay, so we'll measure that. So let's say we got in kind of late because we have to be realistic. Yeah, I would probably be sleeping then. That's London. So that's 104 pips. Again, pretty big stop loss. That means your take profit needs to be at least 200 pips. Okay, so that's 300, 400. Let's see how far we can get it to go without my mouse going nuts. Sorry, blame that on Apple for all of you Apple haters out there. Uh-huh. So that's 160. So
We're
this
not Apple haters, we're pragmatists.
sure. That's 380, guys, 380 pips on this one move. So if you knew for sure this is your take profit really tight, it's where your stop loss is tight, then you know your take profit needs to be 2-to-1 at the minimum. And if you stick with the 2-to-1 risk to reward ratio, I forget exactly what it is because there are some variations in terms of the value of a pip and other, silly things that are really in depth to talk about. But with the exception of those sillier things like the value of a pip per pair, how it differs per broker, spreads and commissions and all that other stuff, if you stick to a 2-to-1 risk to reward ratio, your accuracy doesn't even need to be that high. It doesn't. I think it's like 60% and you're still profitable, somewhere in and around 60-ish%, mathematically speaking. And that's in a batch of 50 trades. So 60% accuracy is really easy to obtain with the 2-to-1 risk to reward ratio. You'll still be profitable.
Thank you, Jenny.
You're welcome. What was that your only question?
I have some more, but I can wait. Let somebody else get a chance. Thanks.
No, by all means. You spoke first. You come on. You get to ask them all.
My other question was, for your compound strategy, is that basically a strategy that is built for scalping?
You mean the strategy on the morning calls?
Yes, the golden strategy.
Actually, there's quite a few people who they're in the group and some of them have left the group. They're kind of just really focusing and buckling down to focus and not have any outside noise. There's quite a few people who use that on a higher time frame. Some of them use it in conjunction with things like the support and the support and resistance lines. Some of them use it in conjunction with the triple arrows. Some of them use it in conjunction with their favorite oscillator, whatever that may be. Some of them use it as is. Some people use it on a single time frame, and then some people use it on a multi time frame. But that strategy works on every time frame. So go test. Don't listen to me. Go test it out on the 4-hour, and then take a look at what you see. Go see how often and for how much of the ATR, how many pips, or how much of a range you're going to have going to the higher time frames. You just have to know you can't use the same things that we use on scalping. So on scalping, US 30 or NAS or gold or any of the super fast moving pairs, is fine. But if you're going to be trying to swing that on the higher time frame using any strategy, you better have a much bigger account. You better have access to some funds and some patience, because your drawdown on that could potentially be, your entire 6-figure account gone.
I would also like to clarify that that compounding isn't a strategy; it's a money management method.
True.
So it's what are you doing with your risk, and compounding is basically increasing your risk as your account grows proportionally. So you're keeping the same amount of risk on regardless of how your account grows, and you just keep on raising your trade size until you get to the point that you want to be. And the higher risk you do on your compound, I mean, you can compound at 1%. It just takes longer to get to a certain number. But if you compound, if you can compound based on 1% per day, if you can make just 1% per day for 200 trading days in the year, which is, it gives you like almost 2 months off. You're going to be 7.5 times your opening deposit. So if you're starting with a substantial amount of money, that's reasonable gains. If you got $20,000 to put into that, you can make a living on that.
True.
So it doesn't need to be a huge amount. It's just what you want to be doing is proportionally increasing your risk. That's compounding.
Okay, I understand.
The strategy is kind of like this. This is a strategy. Now you can compound on simplicity, and you can compound on Jenny's golden strategy. You can compound on, anybody's stuff, really. It's just a management. Like some of y'all, I'm not sure if you ever read this, but when I first heard this, I had to go home and I had to get out my calculator. But there's something along the lines of a penny doubled every day for 30 days is over $1 million. And when you think about that, you don't think it's possible. But a penny doubled every day for 30 days is over $1 million. Or something. I don't know exactly what it is. I'll have to look it up. So God forbid, don't quote me, but something on the lines of that. And when you do the math, it's actually true. It's like, whoa, to give you an idea of the power of compounding. Like
5.3 million.
Yeah, there you go. 5.3 million. I know it's crazy. It's unbelievable to think about. 1 penny doubled every day for 30 days is over $1 million in 30 days. That's crazy. To give you an idea of what's valuable, they say that compound interest is the seventh wonder of the world or something. The seventh something. It's something, but it's amazing once you learn it.
Well, thanks for making me feel bad.
No problem. Anytime, Derek, I'll do that for free. Anytime, I promise. Because I got to have fun with you sometimes. Okay, so what was your next question, Joseph? Or does that answer your second question?
Yes, I think you covered most of them. My other question was about drawdown, but you already talked about drawdown. I was going to ask how much is too much drawdown. That was one of my question. And my other question was when does a swing change? So you're hoping you're looking at it and you're saying, okay, I'm starting to swing change, but then what determines that the trend has now reversed? What's the easy way to spot?
So let's go to one of these repainting. Let's use the simplicity system because it's here. The simplicity is telling us it's a buy. The second it makes a lower low, any lower low, that is invalid. It's no longer a signal. And in my opinion, which doesn't mean it's the end all be all, it's an opinion. Okay. If I'm going for a buy and we make a lower low, there's no strategy in the world. Well, there's no way around that buy, whatever reason you got into the buy, if you were timing the bottom, if you were looking at EMAs, if you were looking at oscillators, overbought, oversold, breakouts, consolidation, breaks and retests, flags, it doesn't matter. If you were using Ichimoku or if you were using quarters theory, it doesn't matter how you got the signal. But if you took this buy and you make a lower low, this buy is now invalid. So the safest, best stop loss in the world, in my opinion, is obviously the nearest high and low. Now, having said that, brokers know that. The markets know that. These are very expensive areas. So is it in their best interest? Sometimes, particularly during high news events and particularly when there's enough movement and money in the market, because remember, they're playing with billions and millions. They're not really caring about that little 0.01 or that whole standard lot you have on there. Our little standard lots mean absolutely nothing compared to the bajillions of dollars they're moving. But just know that they can also come down wick just past this, okay? And then that little area, of course, is worth $1 bajillion. And then, of course, it did end up going in the direction it was supposed to go or the direction you thought it would go. So that does happen. But as the best practice, I'm going to have to say that's your safest stop, especially for anything trend-based or counter-trend-based. In terms of avoiding drawdown, you shouldn't avoid drawdown. You should be calculating drawdown as part of your risk. So your trading plan should say something along the lines of, I'm only allowed to trade so many pairs at one time. I'm only allowed to be in so many trades at one time. I'm only allowed to have so much free margin. So if you have less than 500% free margin in your account, and that's pretty aggressive, to be fair. I mean, that's very aggressive trading. We can talk about how much percent of growth or risk you're taking, but you'll always know for sure how much risk you're taking when you look at the margin available you have in your account. If it's near 500%, you are an aggressive trader. There's no way around that. So
that's also going to depend on who your broker is and how much leverage you're given in the first place.
True.
If you're trading on a U.S. broker with 50-to-1 leverage or 20-to-1 leverage on exotics, you're going to be hovering around that 500 period, but you just can't take that big of a trade. So,
but either way, even if you're using 50-to-1 leverage, right, you're still basically maxing out the leverage you're given. So if you're using 50-to-1 or 2000-to-1, essentially when you're down to 500% margin, you're using all of your leverage up. You're trading aggressively. Like, because you're going to be down, you get a margin called 100% most brokers. They start drawing, closing trades in somewhere in and around that, depending on the broker. So anything close to 500 for me is how I define aggressive trading. Anything above 1,000, I define as safe. I define it as just basic trading. So that's kind of my not super high risk trading. At least that's how I define it personally. So you can't avoid it. It should be part of your trading plan. Is I guess the best way to say it. You should have so many trades that say, hey, I'm allowed to be in this much drawdown. If this is too steep of a cost for you, you have to lower your lot size based off of, like Scott said, the margin you have on your account. If you're trading with less leverage, you can't take big lot sizes. is you're trading with a small account and more leverage. You can go slightly bigger on the lot sizes, but you can't take that many trades. So it all factors down to your margin percent at the end of the day. If it's too low and this is too high. So if you have a $500 account and you're trying to take a 0.5, which is $5 per pip at 70 pips plus spread, well, here we'll say 60 pips plus spread plus commissions if your broker has them, plus everything else, you're looking at this trade costing you about 80 pips at $5 a pip. So will that blow your account? You'll get a margin call before it does, which technically blows your account. So that's the kind of math you have to understand and have to know.
Thank you,
Hey,
Jenny.
Jenny, I have a question.
Hey, James, how's it going?
It's going good. It's going good. Thank you for asking. On the simplicity system, you would get a, I guess, a signal for to go one direction, or for a buy or a sell. But when you get that signal, how do you tell if it's going to go sideways or if it's actually going to go that direction first?
You don't like you can't like predict a consolidation period. I wish you could. I'm sure somebody out there is selling a course saying that they can, and maybe they should tell me all about it because I definitely don't know. We can't predict when the market is going to stay still. I mean, during like certain, non-peak hours, you're more likely to hit consolidation. There's less money in the market during Asian, during the end of London, during the end of New York. So there's some times where you can kind of quasi predict, the market's slowing down, but we can't necessarily predict like a sideways market. Your best bet is just to see which way the market's going and take it for a ride. Our job is to never predict whether it's buying or selling. Our job is just to analyze where it's going and go with it. So
There's
that
an interesting trader that I follow that says the only thing you can risk, or the only thing you can control in the market, is how much you're risking on your trade. So the distance to your stop loss is your risk, and everything else is luck. You do
Okay.
your best to try and get in, but the market is going to do what the market is going to do.
Now, does it typically, I guess, kind of go flat around the same time each day, depending on the activity in the market?
Yes, there are times of day that are flatter than others. There are
Okay.
times of day that are trendier than others, but it's only a tendency. It's not a rule.
Okay. Thank you.
you're welcome.
Learning to read price action is invaluable.
Yep. If I had a secret code to keep me out of this market, I mean, we'd be golden. Literally. But I don't know anybody else who does either. All right, next question. Anybody else have any other questions? Donna, do you have any questions? If she can hear me, provided she doesn't have a rainstorm.
Hello.
Hello, how are you?
Good, good. This is Junior.
Hi, I think you messaged me earlier.
Yeah.
Did you figure it out?
Yeah, I made it. I got a question. I have been watching a couple videos about you, couple of stuff that you said on the videos. Overall, my question is overall in referring brokers for a small account, let's say from $1,500 to $2,000 account, which broker do you recommend?
I have 3. Donna, can you post those in the chat? Actually, you know what? Since you're recent enough on my Telegram to find you, I will go ahead and send them to you myself. But I mostly use Hugo's Way, AFX, and CoinEx. My favorite being AFX for leverage and for speed of withdrawal. So when I want my money, they send me my money. No questions, no drama, no nothing. It's very, very quick. There are some other good brokers that have high leverage, but the problem with them, in my opinion, obviously, is that whole, hey, we can hold your funds for up to 90 days if we want to, if it's above 10 grand. And of course, they report before they send, which to me is ludicrous. But anyways, that's my favorite for high spread brokers, which means it's better for swinging than it is for scalping. My favorite overall across the board broker remains Hugo's Way. Hugo's Way just has, I've never had any problem. Their margin is leverage is 500 to 1. They have all the indexes, cryptos. They have all the stocks. Like they have a bajillion different instruments to trade, and they're really user friendly. Their chat has gotten a little computer automated, which I don't love, but at least there is somebody to chat with when needed. So there's that. And then Coinex has great spreads, but their customer service and web interface and withdrawal process is just kind of a pain. But overall, it's a reliable broker. Then at least with these brokers, when you want your money, you get your money. And that's kind of the biggest thing I think
Okay.
many traders come across is if you,
Another question. Yeah, I got another question.
Okay.
Simplicity works on tablets.
you can do so no, Simplicity will not work on a tablet unless you are linked to a VPS or you're kind of remoting in like a Microsoft Office remote thingy. Other than that, no, Simplicity does not work on a tablet. Like you can, there are ways for you to see it on a tablet, but ideally you would need a, oh, you're a truck driver, aren't you?
Yeah, right now I'm driving.
Okay,
Hey,
so
Jenny,
Woody,
it will work on a Surface Pro 4.
so it will work on a Surface Pro. Do you have that device by chance?
No, I don't have it, but I can get it. The thing is, I'm trying to, for example, everything that mostly of my videos, everything that I do it through my iPhone, because I spend the mostly of my day in a truck. So I'm trying to figure it out how to have, more. For example, I know, for example, my cell phone provider is Verizon. I know they offer, full internet on tablets. While when I'm trying to use my laptop, I have to use it as a hotspot, but sometimes the connection is not that good. So I don't want to mess up in any trades or, I'm trying to do my best in order to.
So then you'll have to get that Microsoft Surface Pro. I mean, so that would be the next stop, and that would mean you don't.
Or a laptop that has a cellular modem. There are also cellular modems available for laptops.
Oh, okay.
In other words, you got to run MT4 on top of Windows.
Yeah,
Okay.
or you pay for a VPS and you run it that way and just remote desktop into it. But James makes a great point. A good Windows tablet is, that'll run just fine. And it's as fast as a desktop computer.
Can he download software onto that like we do for ours?
Yes.
Yes, it works just like a regular computer.
In fact, it is a regular computer. It comes with a docking keyboard and, it's a computer. It's like a laptop in a tablet form.
Right.
That's how mine. That's how.
Listen to all you non-Apple
Surface Pro.
Okay.
traders.
Yeah, I will try to. I will try to get one of those.
It is
Also,
not a budget device, however.
It's what, Scott?
It's not a budget device.
Okay.
I think the low end is going to be $700-800.
Without cellular connection, though.
I'm not sure. Derek, have you ever priced them?
Yeah, but they, you know how prices change.
Yep, absolutely.
So I'm like you mentally. I'm in that ballpark, but I haven't looked in 3 or 4 months, so you know what that means.
Everything I've heard is that it's great hardware, though.
Oh, it's excellent. Excellent.
So maybe start checking Verizon stores to see if they have any of those promotions where like you sign up for their service.
You can get a good Surface Pro for $1,000.
You just went up in price.
Well, I'm saying really,
you're
going to need it outfitted for trading. You don't want to get base model. You got to have some good RAM and good memory. So you're going to need to put about $1,000 in it.
And also depends on how much screen size you want.
Yeah, that's true.
And then, but I've opted for the iPad Pro, so I'm going.
No profanity on here, sir.
I know.
No profanity.
I knew I liked you, Jonathan. See, I knew it. Although it doesn't help us in trading much, does it? Not at all.
It looks pretty.
It does look pretty. It It does look pretty. All of my Apple devices right now look really pretty, guys. Really pretty. All right, but does that answer your question, jokes aside?
Yeah, yeah, yeah. I will need to figure it out to
Okay.
in order to take the trades and doing it in the demo account first, and because I adventure myself at the beginning, I lost money.
Well, most of us do. I mean, Lord knows I was not wise enough to play with the demo at all. I definitely wasn't. I wish I was, but I was not. I guess we all have to take our own losses sometimes. But
Yeah, but I learned.
You'll likely transfer yourself from being a losing trader to a kind of a boom and bust, ultimately break even trader into a profitable trader in steps.
Yeah, it's a little by little. I think I learned not to rush in going to the market, because as much you trade, you get exposed and you're losing money.
Well, if you think about it this way, trading is one of the few games that you can play where you go to play poker. They're not going to sit you down with the big players if you're just beginning. And if you're boxing, you're going to be doing a little sparring in the gym, but you're not going to be going up against the heavyweight champ.
Mm-hmm.
And here, everybody's thrown into the same arena. So give yourself time to learn.
Yeah. Yeah, I'm trying to catch, a little by little, from everyone. So I'm trying to figure it out at the end, because something, as much you learn, I think you will make it at the end. Just
And also remember that as retail traders, we have disadvantages and we have advantages. We are swinging small enough amounts that the big players don't really care about us, and we're looking for hints as to what the big players are doing so we can ride their coattails.
that's it.
yeah.
And so we can take a ride on that big dog, and the dog doesn't really care.
Okay.
So that's our advantage as retail traders. And it's something that the big players, because they're moving billions of dollars a day, they don't have that advantage. If, when they try to get something done, they move the market, and it moves in the direction that they don't necessarily want it to go right away.
Mm-hmm. Yeah. Okay. Okay. Yeah. That answered my question for now. I would like to keep, listen and learn from you guys.
Well, awesome. Hey, we'll come and hang out anytime. Welcome to the group, and I'm glad you made it on here. Hey, real quick before we move on, Fritz in the chat said something about the simplicity on the laptop. Listen, guy, it's a very heavy CPU driven thing. So first thing you're going to need to know is how to clean out your MT4 regularly. Secondly, the next best thing you can do, let's see if I can put my foot in my mouth, go to options, is limit some of this stuff. So turn these down. Okay. You don't need those to be extremely high. It's going to be taking a lot. Also, you can delete any of the pairs you're not using and you're not planning on trading, take them off your chart, because that's also pulling data. Those things are going to speed up your MT4. And then of course there's a YouTube video, if anybody wants to drop it in the chat, that will teach you how to speed it up. But I wanted to ask real quick, for the person who said the Surface Pro is good, have you tried running Simplicity on the Surface Pro, just out of curiosity?
Yes, I have. I do have Simplicity on there as well, and it runs fine. It runs great.
No freeze ups, no nothing, huh?
No freeze up. But like you said, like you just told the other gentleman, I only run maybe 2 or 3 pairs on it. I don't have a whole lot open. I may have 4 tabs open, one for the 1 hour time frame and one for the 15-minute time frame of only 2 pairs.
All right. And I know that Pat's working on the dashboard, so that should make it to where you don't have to have all those pairs open too.
Right.
Yeah, the Surface Pro too, it's very high-endy hardware, so you can expect it to perform similar to a higher end MacBook.
Okay. But just keep it clean. You can't like put a whole bunch of different programs and games and software and 1,000 things on there and then expect it to run MT4 smoothly. I'm guessing it won't happen well. That's just my guess.
Yeah, I mean, I personally, I don't think you should be having your trading machine as your everyday machine if possible. But I understand we all have different bank accounts, so I
Yeah.
don't mean to sound rude. If I do, I apologize.
No, you're good. Marcus says, I'm trying to put on a VPS. I hope you're using my VPS. It's a good one. But if not, if you are using mine, customer service will help you with anything you need. If you're using somebody else's or some other one, try the customer service if you're stuck putting it on the VPS. It should be a seamless process, a pretty seamless process. So T4 Mobile, while I'm on the go. Indicators from T4 Mobile. I'm just answering questions in the chat real quick. You don't know you had one, huh? I don't know what that's about, but I don't have a bunch. So I like MACD. I like EMAs mostly. Almost everything I do is EMA and MACD, which are EMA essentially based. I like the ADX set at 10, level 25, but those are the best free MT4 mobile device kind of ones to go to. Okay. I didn't know.
I have a question from YouTube.
All right, go ahead, Donna.
His name is Bob. He says, what is the best time frame to scalp? 30-minute, 5-minute, or 1 minute? When I scalp the 30-minute and 5-minute, the trade always goes the other way. When I trade the 1 minute, I catch the trade quicker.
Is he using simplicity? Because I mean, that would be a little rough on the 1 minute. I mean, I would just be cruising.
That I don't know.
That would be that's painful to me. There's too many ins and outs. I like the 5 minutes.
Bob,
If he's using my strategy, it would be the 5 minute. I'm still sticking with the 5 minute. If he has more capital to play with, and a little bit more patience for the rules and understanding of entry and exit rules, I'd say the 15. But if he's just using whatever system, 5 minutes pretty good. You need to have nerves of steel and emotional control of Superman to do the 1 minute. So
and what I would say is that, price and price action is fairly fractal, meaning you get the same kind of patterns on each time frame. But a big part of it is, do you think fast or do you think slow? You need to make a bunch of decisions based on a lot of different factors. And if it takes you a while to process that and put a trade on, trading the 1 minute may not be the best choice.
Yeah, that's
give yourself enough time to think.
Hopefully that answers that question. We won't know if that answers because that's YouTube. So, but yeah. All right. Within the SuperEZ family, is there anybody else that has any questions, comments? Let me read this last one from David Collins. I actually got the simplicity system this weekend, and I was just wondering, I know Uncle P talked about that in this tutorial, but what pairs do you guys trade and what time of day do you guys trade more often? Also, how many pairs do you trade? I go back and forth on this. The best way to be is to pick a handful. So pick 4 to 6, no more than that, of differing pairs. So they shouldn't all be GBP. They shouldn't all be NCD. They should be not correlated pairs. So if something does happen crazy with a certain country or currency, you're safe. But if a healthy decision would be 4 to 6, I typically am running super simplicity on, I think it's 13 or 14 pairs right now. And I can post a list of which ones, but it's all the USD pairs primarily because of spread. GBP pairs, most of them, except for G, doesn't have GJ and it doesn't have GCAD and doesn't have GChef. None of the chef pairs actually, except for USD chef. Let me think. CAD JPY, Euro NZD, Euro USD, and Euro JPY. I don't have Euro odd because it's a very expensive pair to swing, and I don't like paying those fees, so I skip that pair altogether generally. I don't have a lot of NZD pairs except for GN and EN, and NU. So that kind of gives you a pretty good ballpark of what those are. And when do I trade? I trade that mostly in New York. So I'm kind of testing it to see if I can duplicate my triple arrow results with it. It's been hit and miss. I mean, I've 10x the account multiple times, And to be quite transparent, it went back down a couple of times. It is back up. I think it's at 300. Nope, that'd be 3,000% of what I started with, even from the ups and downs. So like had I been withdrawing, that's not bad for what, 3.5, 4 weeks now, give or take. That's not bad at all. So it's possible, but it still comes down to surviving stuff like this. So if you took this trade and then it went against you, you have to survive these odd moments. And in any trading strategy, that still seems to be the major thing. And it's not just for me, I think for many people. So that answers your question. I'm pretty sure it does. With the pairs that you trade, do you find that you can get good setups every day? No. So here, watch, hit Control Y on your platform. This will give you the day breaks. So this is EN 5 minute. This gives you 3 entries, although you're sleeping for one of them at least. This is Asian, this is London, this is New York. Not always will it happen so perfectly, but we can kind of scroll back. On the 5 minute, you would have missed this because this is London. And if you're not in America, sorry, but assuming you're in America, this one's in London. This one was right before the close of the market, so you would probably have to wait, or just really trust the system. So just kind of give you an idea of what you're seeing on the 5 minute. So now if we go to the 30 minute time frame, let me make it less ugly. So I'll zoom out. Oops, zoom in. I knew better. Take a look. So one day and then nothing for another 5 days. One day you get a false sell. This one was a loss, but then again 5 days later. So you're definitely not going to find a trade every day. You're not going to find one every day on on most pairs if you're trading like the 30 minute time frame. And if you're swinging, meaning you're on the 1 hour or 4 hour time frame, you're ideally going to find 2 to 4 a week in most cases. And that's all you need. You don't need more than that. You might find 6 trades in a week and that's it. You'll find that most successful traders who are not scalpers don't take 50 trades in a week. Most of them take, 5 to 10 if they're swing trading, sometimes 1 or 2 if they're swing trading, unless they're scalping that specific trade. Sometimes you'll find that even scalpers, they're only looking for 20 or 30, so like a handful of trades a day, and that should be it. So you shouldn't be looking to overtrade.
Hey, Jenny, if you don't mind, could you explain your moving average again and how do you use it for extra confirmation?
It's just the 50 EMA. So this is set to the 50. That's 50. I'll double click on it just to show you. All it is the exponential moving average. That's what EMA stands for. If I get a signal, okay, so like on this one, if I get a signal and price is kind of still sitting here, I see these wicks. We're not really making any lows. Depending on, like, this is obviously, we can see this is an Asian session and I'm going to bed. So if I'm going to bed, I'm not going to put a pending order here. Now, when I check this in the morning and I see this happening, so keep in mind, I'm not coming to my chart until at best case, what is that, 15, not there. So 15:30 is about the first time I'm looking at the chart. If I'm seeing that we're making lower lows from this, okay, so here's where we got the signal. We're kind of playing around the 50. I don't necessarily have to take it at this exact time. And in fact, I'm going to bed. I don't want to take a risk on a trade that I'm not, overly confident on in the system I'm testing. So bottom line is I'm going to come and take a look at this chart on the following morning, and anywhere around 15:30 on the MT4 time frame. So what I'm going to have seen at that point is, okay, so we did break and make a lower low. I'm going to see we bounced around the 50. We made a higher high, but we did not break the previous high. We've got wicks to the top side. And then I'm also going to see that we broke that low. We've retested it. So from there, this is 15:30. What was it, this candle? I have a couple of options. I can take an entry knowing that we broke and retested structure, right? That's just basic trading. That's naked trading. We were going up, right? We have several waves going up. We stopped. Okay, we came down. We failed to make a higher high. And then we broke. When we came down, we didn't retest this zone and then continue to the upside. We broke that zone and retested this one. So I've got a couple of options when I see this at around 15:30, depending on if it's a day I'm coaching or not. So I can enter there, provided I like my risk to reward and I like how much potential I'm going to see. So assuming I saw that somewhere in the middle of this candle, we're just going to go with assumption. first thing I'm going to do is measure where the next low is, which is about 85 pips, right? So best case scenario, I'm looking at a potential of 85 pips. I would need it to break and retest that area before I look for the continuation of anything lower. So having said that, from that same middle of the candle, give or take, I'm going to measure from the next high and say, okay, that's barely, not even, it's a little better than a 1-to-1. So I've got a couple of options. I can take it if I want, if I'm feeling risky, or if I know what the other pairs are doing. If I'm super overconfident, I can take it in the middle and say, I'm just trusting it, period. I can also choose to say, I'm going to wait until it breaks this zone, which is here. So I can have a pending order and take it down. Knowing my risk is pretty high, that would be closer to a 1-to-1 risk to reward ratio. So those are choices. That's definitely a 1-to-1, not ideal, but you're going to see a lot of that. So you have to make the decision of, is this a favorable trade for you? Your third option is seeing, and I'll draw the line for this part just to give you an idea. We said 1530, we're going off the middle of the candle. I can also choose to have an exceptionally large stop loss and say, okay, this was that high. We have a wick here. I don't know if y'all can see the chat, if it's in the way of your screen or not, but let's see. We have a wick here, the green wick to the left. That's pretty tight. That's going to give me a very, very tight stop loss. It's not ideal though, because we could easily wick up and then knock me out. So I can put it here if I choose. I can also pick any of these kind of previous lows, or I can even use this, okay? That's most recent kind of super easy support and resistance. I don't find it super valid because we broke above it, but it gives me a good target, an area where where price has stopped before. So 1 stop, 2 stops, 3 stops, 4 stops, 5 stops, even just kind of holding my cursor, 6, 7, 8, 9 bajillion, you'll see that this is kind of a respected area for quite a ways back. So I can say, hey, if I don't like this much of a stop loss, I'm going to go for the very closest structure I can find, and I can pick between that. But you have to have some amount of actual data to support what you decide. It shouldn't just be picking all willy-nilly because you feel like it. So those are the options you would have, or I would have when I came to the chart. So it would all depend on what I see in structure-wise, what I was seeing, if I was in another Euro pair, another NZD pair, how much margin I have before I make that decision. But that's how I would make the decision. Is I see the signal, I'm going to bed, I'm not going to take it. When I wake up, I see that we did not make a higher high. And I've already went through this once, but I'll zoom through it one extra time. We did, however, make a lower low. We're definitely kind of going down. We see some structure to the left, so you can decide how you want to play this. But you have plenty of options, just to give you an idea of how I'm seeing it. If I had saw the candle right here and right here.
Okay, I have another question for you. If you would, could you go to EUR GBP?
Oh, I tried this pair. If I'm giving you advice, you probably shouldn't listen to me on this pair.
Okay.
I'm being dead serious. Like, this was the one I wanted to perfect because it was the most expensive pair to trade. So
Yeah.
knowing me, I wanted to be the best at this pair.
Now I'm learning this pair, but I'm beginning to see that when this pair go into the pullbacks, I'm beginning to notice that the pullbacks are in zones. When it pulls back inside that zone, how likely is it to break that zone? And when it breaks that zone, does that indicate a I guess a reversal?
I don't know if your question just applies to this pair or not, but EG is a very expensive pair to trade. So I'll say that when it pulls back, does it pull back to the zone? Yes, but most pairs in theory do. So when we break out, we should pull back to a previous zone. And most of the time, when you really start to see the zones with your naked eyes, no lines, no nothing, you'll see that that's the case. So the price stopped here, we pulled back to here. Price came up, price stopped here, we broke out, we pulled back to here. We broke low, which make a lower low, but we already knew where that lower low was going. It was going to the next zone. And the same thing with the going up. Like, all this is kissing. I mean, they're just little peck, run away, little peck. It's like a game of kiss and tell kind of thing. Like, that's how I see it.
Right. If you would go to the end of the I guess the current time right now,
What time frame?
right, the 1 hour time frame,
Okay.
right where price is right now, that appears to be I guess like a zone. If you look to the left, you see where it came to the top of that zone, and now it looks like it's continuing the downtrend. So if it had broken, I guess the where it is now, would that indicate an actual trend reversal? This is without, I guess, without looking at the at simplicity. Having simplicity makes it easier to hold on to.
So this whole area is kind of a zone. A zone isn't just like a straight line, although we use them for points of reference. It's kind of a bigger box, if you will, right? So kind of
Right.
stalls out in this area. We push up and kiss the top. We retest 50% of the zone, which is not something we talk about often, but it's definitely valid. It's kind of when you retest 50% of the zone, it just makes it more of a stronger proof of where your box is. We broke above, whatever. We finally broke below. We have not actually retested this zone yet. I mean, not per se. So do I
Okay.
think it has some room to push back up before it drops? Yeah, I do. But I was pretty transparent when I said, be careful about listening to me on this pair, because this pair ate me up and chewed me. I did not survive this pair.
Wow. Okay.
Well, here, the truth is, like, I was trying to master it so much that it stayed in the zone for like, I don't know, 6 months. And I finally walked away and said, I'm just done with it. It consolidates quite a lot and then it breaks out, and then it consolidates quite a lot and it breaks out. So that's just how I'm seeing it. If I were to not know what pair this was and I was looking at a naked chart, this is the 15-minute time frame we broke below. We technically haven't come back up to test that zone yet. Now, granted, we do have these really small candles kind of pushing up, a lot of wicks, a lot of tiny candles. So that's not like a huge push up. Like this isn't like a breakout to reverse. It looks more like the pullback, the flag. Like if we were to analyze the candles on this time frame.
Okay.
So the 30-minute time frame, you have a sell there. You have a really good idea of where it's going, but look where price stopped. Price kind of made a super flat bottom, and that kind of follows suit with this zone over here. If we break below this, I don't know if you're in or out of it, then you know your next target is only 15 pips. But keep in mind, those are 15 expensive pips. So those are worth double of what some of the other pairs are. So take that with a grain of salt.
Right now I'm out, but I'm looking for a re-entry, which is why I asked about the zones.
Thank you, Scott. Sorry, Scott was heading out. You're looking for a re-entry. So for that, like, I forget, are you in the other group?
Yes.
Then just use that other indicator. That gives perfect re-entries. Pop down to a smaller time frame, and I'm not going to go into great detail, but use that re-entry method. So right now on the 5-minute time frame, we're in buyer's territory for simplicity. We definitely, like I said, have a little bit more room to push up to either of these zones, any of these zones. So wait till you get confirmation on that indicator in the advanced group, and that's the perfect re-entry to like continue to the downside. But for
Well,
now,
when you said the other group, which group are you talking about?
okay, so I guess not the advanced membership group.
The advanced membership.
So
No, but I'm thinking I may need to be.
okay, gotcha. Well, you can definitely join and come hang out. That gives you it's just a really good strategy. It gives you really good re-entries because everyone talks about catching this entry, right? But what about when we get knocked out? What about when we miss this because we were sleeping? Because some of us do need to sleep, okay? Like me.
Okay.
Right? What happens then? Then most of us, we see this big trending move, and all we can think of is how come we can never catch this move, right? Hindsight's 2020, we're all back tested billionaires. That's great. So the most important thing in that strategy that I had created with a really close friend, is we need somewhere we can re-enter. So we need to be able to catch that. Now, SuperEZ does have a method to catch those moves, and they call that the Stairmaster. It's very, very good. It's not bad. All it's using really are the SuperEZ support dots. So when you're in the same direction as the triple arrow or the simplicity, you would find that and use it as a pullback. Okay. That's how you would use these dots.
Okay. Now, how do I get in the other group? Do I DM you for that or?
Please don't know. Go to the step 5 on the website. If you really need me, come to class. It's just way easier. And I promise I will treat you like my friend, like my brother.
All right.
Okay. But there's so
All
many
right.
messages, and then I feel like a horrible person if I can't get to them all. And 99% of the time, I just can't get to them all. So
I got you. I understand. Thank you.
yes, sir. Awesome. Well, thank you for stepping up, and thank you for talking.
All
Hey,
right.
Jenny, can I ask a few questions?
All right, Eric, we're going to end with you tonight. So you come on out.
Oh, Lord Jesus. Oh, all right.
Have all the spotlights all on you now. You better be
Right.
good.
Now, the this is probably my third class. I remember when I went to the advanced class that looked like it was on a collegiate level. But you and Scott are excellent instructors. I think I quite get. I think I'm like 70% there. I understand it. I've been doing everything you said, and you're right. I'm 10 and out. I can't. I'm not holding anything. And your system and your strategy. I haven't lost yet in a week. So
Please
I want to say thank you.
Way to go. I'm so happy for you. You're welcome.
That challenge wasn't good for me, that 6-figure challenge, because I'm very competitive. So I'm like on it. And then you threw the NAS 100 challenge. I think that's a challenge too, right?
Yes.
And I'm bouncing back and forth because I have Trader's Way, and then I ended up getting Hugo's Way because of you. And that actually segues to my first question. I noticed with Hugo's Way, and maybe it's a setting or is it something that I'm doing wrong? When you try to manually exit out, do you have to do it twice? You hit the little X and then it look like the market execution box come up and you got to close from there. Is that true, or is it something I'm missing?
I think it's something you're missing. I think you don't have one-click trading turned on, because
okay, at the top,
hit the X, and then once you hit the X, it should close. So if you're experiencing a double process close, it's because just it's a new broker for you and you need to turn on one-click trading.
Okay, because I know with that NAS 100, I can't be clicking twice.
Yeah, no, you can't be that moves quick. Sorry, no. So you have to turn on one-click trading. So for example, this is just a demo account, but if I go here and I go to one-click trading, if that doesn't turn on automatically, it's because it's disabled. So you should get some warning box that pops up. And I'm reasonably sure, now mind you, it has been a while. I think maybe there's a way to do that in here. I just don't know what it is. It's been a hot minute, so it's somewhere in the settings. So if anybody knows, by all means chime in, but I'm not 100% sure. Like to turn on one-click trading.
Just go to trade.
But this in AAFX. I'm on
It's
Hugo's
in your
Way.
MT4 under
Oh,
your.
it's in the MT4. Okay, thanks, Derek.
So what do I go to, Derek? Just so people who are listening can see.
You go to MT4, you go to tools, and then options, and then trade. And at the bottom, you'll see one-click trading.
Oh, there you go. One-click trading has to be on. You'll get this warning box, and then hit accept. Hit OK.
Oh, that is so deep. Like this class is off the charts. I mean, there's no way I was just going to figure it out. I heard you tell one guy practice on demo with something. I wasn't really a demo guy. I just had to, it just didn't feel real to me. That's just me personally. I know why people do use demo, but it just wasn't for me. So I just jumped right in this thing and lost some money, a lot of money. But since I've been with you guys, this is the longest winning streak I've ever had. So
do me a favor, Eric, withdraw. Okay. I don't care if it's not for a cup of coffee, but just make sure you withdraw, make it real, because video game money, and I call it that when I talk to my children, and I call it that when I talk to certain people, because sometimes it's so easy for some of us that it becomes video game money. Like you'll see these numbers come up and you're like, whoa, that's like 10 grand. And then it's really easy just to watch 10 grand come and go. But when like 10 grand could like change somebody's life, not everybody, I know. And once you get to different numbers, like it's not that much money, but just make sure you withdraw. Yeah.
Yeah, I did have it highlighted where I wanted to withdraw because you did that in the video. I saw a lot of videos the last 2 weeks, and that was my second question. You was talking about the LLCs and the trust, and I know you're not a accountant financial advisor, but with the trust account, because I have a trust, when you withdraw, you saying put it in the trust, or you're saying open a broker's account in the trust name?
So the only way to do that legally is to put the broker account in the trust name managed by and so on. So you're going to need to talk to your accountant about that. So it sounds like a lot, and at first it's overwhelmingly complicated, but then once you really realize it, it's just like step 1, 2, 3. It's fairly simple once you kind of get past all the red tape. But the broker account needs to be in the trust name with a beneficiary, depending on your broker, depending on what country it's in. And then of course the trust name could be managed by and payable to however you have that set up accordingly.
Got it. And my last question is, I think it's the 250 moving average we use and the 50. If both of them are kind of side by side or one is on top of the other, are you not supposed to trade, or you wait until they split? How does that actually work? Because I've seen that and I didn't know what to do, to ride the trend, or was it a consolidation?
Well, keep in mind, so wait a minute, let's put on another color. Lord knows I can't do red. I'm gonna have to do something else. Orange. Okay, well, that's kind of gonna work. Let's make it just really wide just so you can see it. So that's the 250. This is the 50. So you're saying
Right.
like they're close to each other. So
Right, this like a straight line. I saw it one time, both of them was a straight line
also something like this.
going across. Yes.
So you're looking, the 250 is essentially the 50. So the 250 is the 50 on the 5 minutes. So if you were on the 1 minute, the 250 is the 50 on the 5 minute. And that's where you got those settings from. So the 50 on the 5 minute is what this would stand for. And this would be the 1 minute's 50, for example. When they're on top of each other, you can see it's consolidating. That's why that indicator is built in a way that tells you, hey, the EMAs are inside of the fractals. It's telling you it's consolidating. It's not foolproof, but at least gives you a tiny itty bitty baby heads up of, hey, we're kind of in a zone. And it's not always going to be that case, but it will give you a little bit of some warning of stuff like this. So the EMAs are all in the same zone kind of thing. They're in between fractal levels. It's kind of playing out. And that's how that is built. And it gives you those little red letters right there. It tells you when the ATR is too low, so it's not moving enough. It tells you when it's kind of consolidating, when it says the initials IN. It pretty much means price and the EMAs are in between a zone, stay out. And it tells you when the ADX has no volume. So it'll say, hey, wait, this is your warning. So pay attention to that on that indicator. It'll keep you out of bad trades. Or at least
I don't do nothing but 5 minute. I'm just think that's what's working for me. I remember you were saying that I may look at the higher time frame up, but I can only, the 5 minute, I understand that a lot.
Okay, awesome. I like the 5 minute too. The 1 minute gets a little nerve wracking. It's like emotionally exhausting. So it is kind of exhausting.
Thanks again, Jenny. I'll let you know when I hit that first withdrawal goal.
All right. Okay. That you better. So
All right.
coffee, but thank you so much for all your kind words. I'm glad you're doing super well. All right, Donna, was there anything else in the YouTube that I need to know? Donna, anything at all, if she's still there?
Nope.
Hey, Jenny.
Nope, we're good.
All right, one more. Hey, Jenny. Who's the Hey, Jenny?
Hey, that's me, Hirohito. I just have one quick question. Follow up to my question earlier. You favor the 5 minute. So what time frame do you look up to know where that trend's going for the 5 minute? Do you look at the hour? Do you look at the 30 minute?
Well, I know you were on the call this morning because we were talking about your name. So
Yes, ma'am.
you when we first started that call, I go over my whole spiel. I think I talked a little bit, and then we did a top-down analysis. So we did an analysis from pretty much the daytime frame. We did a 4-hour, let's see. Lord only knows which one it is. Something like this, right? So we did a top-down analysis of what we're looking at with zones and with trend lines. So what time frame am I looking at overall? Is I'm looking at the big picture. So I'm going to go to the day chart. Pretty simple. I'm going to get a really good idea of what this is doing. This was pretty much going up since I was born. And then all of a sudden, COVID happened, right? Woo-hoo. So that's kind of the whole big day picture. A little sarcasm included, yes. But now I'll zoom in to make it less ugly. And all I'm going to do is I'm going to go top-down analysis. I'm going to go to the 4-hour. I'm going to see how this is kind of sitting on a trend line, but we broke above. Got some wicks. We're pushing down. I'm gonna kind of analyze this based off of structure, based off of trend lines, based off of entire moves, right? And I'm gonna keep going. You saw what I did, and you'll see more in depth again on Thursday as well. But I'm going to see, okay, so we broke above it, but that was a wick. It didn't close. We're sitting at a master trend line. I see that we broke above this zone, right? I'll use my crosshairs. And this is all I'm doing. I'm getting a big picture of the market. So then when I go down to my 5 minute to get an idea, like I talked about, it is not my job to have the answers, and it's not yours either. You don't get to say that even though your name is Hero, all jokes intended, even if your name is Hero, like you don't get to decide that. I don't get to decide that.
Yeah.
Our job is to say, hey, we have our indicator telling us buys and sells. We have our rules saying we're buying or selling. If we do continue the downside, I know that where my next target is going to be here, and this next target is going to be here. So my next take profit, if this continues to sell per our strategy, is going to be somewhere in here. And then I would know this structure that I'm making my analysis on, that if we do get a breakout to the upside and we respect this trend, I know that my next target is going to have to be this barely, maybe baby wick. That one's going to be a little rougher. If we break above this, I know where I'm going. If we break below, I know where I'm going. So that's kind of what I do.
And sometimes you just get hit with the counter trend candle all day. That's nothing you can do about that. Is that correct?
That is correct. So, but you can look at the size of the candles. So the size of the candles alone, they're going to tell you get this engulfing candle. For the most part, when you come to the chart, you should be able to take a look and say, okay, what's the biggest candle on the chart, starting from where current price is and looking to the left. That's you're deciding, a direction. Not to say it's the end all be all, but it's definitely a good way to be. So up right now, most of our big candles are bullish candles. If I'm saying correctly, I don't see a whole bunch of bearish candles. We don't have any real breakouts to the downside, at least not on the 15-minute time frame, right? Most of the candles we're seeing are all bullish. So our bias should be bullish, but our job is never to predict. It's to say, hey, when we get a signal, we know where we're going. When we get a signal, we know where we're going. We know where we're going.
So stick to that main counter trend on the day and trade on the 5 minute as it goes up and down.
Kind of.
Okay. But with a bias to the upside.
Well, no, I'll go back to this, and here's why. So ready? Let's go to the day. How many pips are we going for? Or how many points?
20.
So that's 200 points. So this is a 1 day candle. That is 9,000 points or 9,000 pips. It's almost 90,000 points. Yeah. So do you know how many times that went up and down in that one candle?
Dozens.
90,000. Okay. So just to give you an idea, and I didn't even measure that wick. So what that means is in this one candle on the daytime, you're going to have 5 or 6 200 moves, 200 pip moves to the downside, not 5 or 6 200 moves to the upside, 5 or 6, 500 pip runs this way, 500 pip runs this way. This one candle on the daily time frame tells you a whole bunch. So that doesn't necessarily matter as much. We don't care what this big picture is doing. We just want a good target of where we're going. So I don't care where price goes. I just want to go with it when it goes there. That's all.
Me too.
That's it, right?
That's it. Thank you so much, Ms. Jenny.
You are welcome. And again, we love your name. Derek is probably going to pick on you forever, but I will.
That's okay, Derek. I love Derek.
See? All right, guys. Hey, that's enough for tonight. I am going to go ahead and cut it short. Thank you for everyone who stayed the course. Again, if you're brand new, please, if you need help setting up charts, come to class. If you need help and you're listening to a recording, come to class, ask your question. There is not one too big or too small. I promise you, no one can ask dumber questions than me when I got started. So I promise you, no chance whatsoever. Thank you for all the thank yous in the group. I hope you guys have an amazing week. Take care and God bless.
We love you, Jenny.
We love you too. Have fun.
Good night.
Good night, guys. Sweet dreams.